Is going on YouTube? I am Prepper Princess, the author of Living on Almost Nothing. If you are interested in purchasing my book, I will go ahead and leave a link down in the description box below. Today, I want to talk to you about the top 3 investments that earn me $2,000 per month now. I made a video on this a while back, and some of them are going to be the same, but I do have some new ones in here. So there are investment companies that you invest in for dividends. There are ETFs and there are mutual funds. I don't want to go over companies too much because companies are the most risky investment that you can make, because if you were to put $100,000 into a company and that company were to go bankrupt, you are out $100,000. When you invest in an ETF or mutual fund, an index fund, things like that, if you were to put $100,000 into that stock, there could be 100 different companies under that $100,000 that you invested. So the likelihood of 100 companies going bankrupt all at the same time so that you would lose all of your money, the chances are much more slim in that happening. So in that way, it is much more risk averse and much smarter for you to invest in a mutual fund or ETF that has several different subsidiary companies as opposed to individual companies. Now, before I get started, I have to give a disclaimer here. This is for entertainment and educational purposes only. I am not a financial advisor. The only financial education that I have is through the School of Hard Knocks and by investing over the last 20 plus years. You are not guaranteed to make money. You may even lose money. So do not blindly follow someone on YouTube, and go ahead and do your own due diligence before making any financial decisions or investments. I think that I covered myself on that one. So the first one is going to be MPLX. MPLX is an LP gas and oil company. And from what I've understood, people who work there, they think that it is great. Now, over the last year, it has a 17.89% increase in money. So meaning it's gone up that much. The stock has gone up that much in the last year. In the last 3 years, it has gone up 80.59% in the last 3 years. Now, it has outperformed the market, and it shows here, as I am making this video, that the momentum for MPLX is strongly bearish. So it looks like it's going down. So who knows? This might be the right time to invest. You never know. Just so you know, you want things to be bullish if you want them to go up in price, and they are bearish when they go down in price. Now, this has a dividend yield of 9.27%. So that is nearly 10%. So if you were to put $100,000 into this account, you would be earning $9,270,000 a year in dividends alone. Now, again, this is a single company, not necessarily something that I would recommend, but it is because of it's up to you depending on your risk. Another one that I personally invest in is Amcor. Amcor used to be, oh gosh, I forgot the name of it. I apologize. Bemis. It used to be Bemis. It was purchased by Bemis a long time ago. It is considered a hold, and it has a dividend yield a bit smaller at 4.87%. So, rounding up to about 5%. It's not a huge dividend yield. However, this company has been in business since the Depression. They have even had dividends throughout the Great Depression. And in my personal opinion, I think that they are just all around, if you're going to invest in an individual company, they're probably on the better end of reliable to continue to give dividends no matter what the economy. And now this one has been down for the last year and 3 years. So in the last year, it is down 16.95%, and in the last 3 years, it is down 4.09%. But that may be if you're one of those people who likes to buy when it's low, then again, this might be the time to purchase this type of stock. Now let's move on to ETFs and mutual funds, index mutual funds. So this one was actually brought to me by one of my commenters in the last investment video that I made. So I dropped quite a bit of money in there. I dropped $50,000 in there. And this is called JEPI. That's JP Morgan Equity Premium Income ETF. JEPI is the ticker symbol. And this one has a historic return of above average and a historic risk of below average with an 11.45% distribution yield. Now, in my opinion, that is a really, really great yield, but you never want to chase the yield. You also want to look at growth. So over a long period of time, but if dividends are what you need and you need them right now, this is the one that I personally go with. It does not mean that you should go with it. It just means that I go with it. So above average historic return, below average historic risk, and the frequency of what makes this one, sets it apart from the other ones, is that the frequency of the dividend is not quarterly, bi-yearly, or yearly. It's actually done on a monthly basis. So if you were to put $100,000 into this ETF, you would be making $11,450 per year, or about $1,000 per month. A little bit off, but about $1,000 per month off of a $100,000 investment. And with this one, it is an ETF, an equity ETF, and we are looking over the last 5 years. It is up 9.1%. Over the last 3 years, it is up 7.5%. So in the long term, it's actually it looks to be a really good investment, at least on the surface. Now, this is somewhat new to me. It is a new one that I've been dealing with, so I don't have a long track record with it. I've been with them maybe 3 or 4 months, so it's not like I can just be like, it's awesome all the time. I've had this thing for 20 years. I don't even think that they've been around for all that long. But it is something that I like to look into. And this one is an ETF, so it holds several different subsidiary stocks. So it's got Adobe, Microsoft, Amazon, Hershey, Accenture, MasterCard, Pepsi, Progressive, Comcast, Coca-Cola, and so on. So if it were to, you would have to have a whole subsidiary, a whole bunch of different companies go completely bankrupt in order for this equity ETF to completely tank and for you to lose all your money. And let's be honest, if the companies that I just mentioned, Adobe, Microsoft, Amazon, Hershey, Pepsi, Comcast, Coca-Cola, all that, MasterCard, if they all went bankrupt, there's more of a problem. Your investments are going to be the least of your problems if all of those companies went bankrupt. That pretty much means that it's the fecal matter has hit the oscillation device is what you would be looking at if that were the case with this one. So I like the fact that this one is much more diversified, and it has a good above average return and below average risk, and it has monthly dividend payments. So that's something that I'm really interested in, and I would like to thank the commenter who recommended this. I actually think that this was a really good recommendation. They did recommend one that I was not into, which I would not recommend, which is SVOL, and they've got a huge dividend rate of 17.52%, but their stock is down within the last 5 years like 70%. So I think that people on that one were chasing the dividend yield and it became overvalued, and it just had an inception in 2021 and it's now 2023. So it must not have been over the last 5 years. It must have been just over the last couple of years. So if you are recommending things in the comment section, make sure that you take a look at the last 2, 3, and 5 years of the thing that you are recommending. Okay, over the last 5 years, it's down 10.61%. Same for the last 3 years. And year to date in 1 year looks pretty good, but the 3 year and the 5 year is not looking so good. So if you guys want to check out SVOL, Simplify Volatility Premium ETF, SVOL. Take a look at it. Let me know what you guys think. Should I be putting some of my money into this one for the long term? Because that's also a monthly dividend yield of 17.52%. But take a look at what their holdings are and the percent of their net assets. Most of it's in treasury bills. So it's like 50% treasury bills, like 38.67 in US treasury bills, and then an additional 13.83% in treasury bills. So over the long term, if interest rates go down, most likely this stock would really, really tank. So just a thought on that. But let me know what you guys think. All right, folks, that's what I've got for you today. Those are my 3 top dividend things that I invest in, top dividend stocks or investments that I ETF and stocks that I invest in, and they earn me $2,000 per month. So again, and you can do the math. If you're like, okay, $2,000 per month, how much do I have to have invested? Pull out your calculator and do the investment math yourself. If you want $2,000 a month, you need $24,000 a year. At a 10% rate of return, you need $240,000 invested. So you can do the math yourself. All right, folks, do what you can with what you've got. Prepper Princess out.